Energy company Sasol has characterized its annual performance as robust. That's despite the company reporting headline earnings per share down 15% at 33.15 rand for the year ended June. However, earnings attributable to shareholders rose 54% to 20.4 billion rand. The company notes that its net cash position decreased by 44% to 29.3 billion rand, attributing this in part to its capital expenditure investments. While the oil price has ticked up relative to where it was in 2016, Sasol says the strong rand crimped its gains. Earlier, our markets anchor Nompumelelo Siziba caught up with one of the joint CEOs of Sasol, Cornell. She started by asking him why there was a 15% decline in headline earnings per share.
The stronger rand actually hit our earnings to about 2.5 billion. And so that was a large hit. It's good for the economy, but hurts us a little bit. The oil price increased a bit, and we did see some of our product line margins increasing, especially in the base chemicals. But at the same time, our liquid fuels were a little slightly lower than we had hoped because of two things. One is we moved as much as we could to chemicals because we had higher margins in the chemical side. But also we had both a planned and unplanned production outage in our NatRef refinery. So our sales volumes are down just a little bit. But overall, I think it was very strong. The real key was the delivery on our costs. This is the third year in a row that we've held our cost base, our cash cost base, to below inflation, which is a real plus for us.
I see that you used some financial instruments to try and manage the oil price and the uncertainty of currencies. How has that strategy paid off?
It has. It has. What we've done is we've taken out positions to kind of lock in a floor and a ceiling on oil price and on exchange rate. By that way, we can guarantee some stability in the profitability of the firm. And of course, that cost a little bit to do. You can't do that for free always, but it has been very beneficial, and to the tune of about 1.5 billion rand for this reporting period.
You've announced that you've made savings of about 5.4 billion rand, this under your business performance enhancement program, and you've managed to achieve this goal a year earlier. Just tell us how you went about cutting costs.
So this program began about 4 years ago when we saw that we really needed to do something to improve the long-term sustainability of the company. Right. Luckily, we started doing this when we still had high oil prices and revenues and profits were still very positive versus today's world where oil prices are down almost 50% from where they were 4 years ago. Right. So we took action before we needed to, which is great because now it's really flowing through. We thought we could do maybe around 3 billion in sustainable savings, which means every year we think, and we've gone up to 5.4. This has been done in a number of ways. One is going back, of course, and looking at your contracts. We also did have a 10% reduction overall in our employee numbers, but that's all been done voluntarily and done over time and taking into account the needs of the people in terms of their exits. We went to suppliers and looked at were we getting the best deals in the market for the services that we needed and how could we do that better. No stone was left unturned, and now we have completed that, and our objective is every year to try to hold at inflation or below. Right, because there are some things that generally tend to be higher than inflation, so we'll have to find ways to be smarter and better, more effective at driving other areas down below inflation.
Now, I know you've got a couple of capital projects on the go. Let's just focus on a couple. We know that you've got the Lake Charles cracker project going. Just tell us how you're getting on with that. We know that's been a massive vacuumer of capital, so to speak. And also Mozambique, you're doing some exploration in terms of oil and gas. How far are we with that? And when do you expect to see these projects actually start generating revenue for you?
Let's talk the big project in Louisiana first, called the Lake Charles Chemical Project. As you said, very large. Our revised estimate that we put out about 18 months ago is for the project to cost 11 billion US dollars. Right? We are 74% through on that project in total. We're about 40% finished with construction, right? But before construction, you have to do engineering, procurement. So in total, about 74% complete. We still expect the very first units to come on at the second half of calendar year 18. So, you know, it's a project of this size takes 4, 5, 6 years, and so we still, although we're getting close, we still have about 18 months ahead of us. So it'll come up in a stage-wise fashion, with the first big units coming up before the end of the year 2018.
And in terms of Mozambique?
In Mozambique, our second big area of interest. We've been in Mozambique since 2004. Currently we're the only hydrocarbon producer in the country. There's been a lot of talk about new fields, especially in the north, that will come online at some point, but right now we're the only company producing. We have a second license area that was granted to us in the south. That was granted to us in early 2016. We have drilled 6 wells, and we have 7 more to go for this particular phase of the project. That will probably be producing gas and oil in the 2020 time period, more or less, in that view.
Many analysts believe that the oil price is going to be capped going forward at around $60 a barrel, simply because the US producers can come in and produce, and therefore always having a situation where there's more supply than there is demand. So what is Sasol going to do? What strategy are you employing with a lower global oil price going forward?
Yeah, we've spent a lot of time thinking about that as well. I guess our view is somewhat in line with that. The shale oil producers in the United States are the marginal producers, and they seem to be able to produce profitably in the $60 range. So, our current forecast for FY18, our fiscal year, is for a $50 crude oil price, and for FY19 a $55 crude oil price. So we're in that band. What you should note about Sasol is we're able to produce very healthy cash flows at $40 a barrel, and that's because of our operation here in South Africa, which is based off of coal. So we can take coal, we mine coal, we run it through our process in Secunda, and we are able to generate petrol, diesel, chemicals, all from that basis. So, if you look at Sasol, it's unique in that it's got a value proposition that's not completely tied to oil. Now, a lot of our product prices, because other people use oil to make them, are tied to oil, but our feedstock is generally more coal and gas. So we have a bit of an advantage. Of course, we'd love to see oil prices go up from a company perspective, but it looks like we're going to have to wait quite a while for that to occur.